Just wanted to make a quick video. I say quick, knowing me, it'll probably turn into a 3-hour monologue, but I kind of wanted to touch on a little mini lesson on liquidity. As some of you who have been probably following the more recent recaps and probably seeing me talk about it a lot more in the markups and the Discord regarding liquidity, as I've been, digging a lot more into it. It's always been a bit of a weak spot, a bit of a blind spot in my trading. So now that we've kind of refreshed the market structure module and the supply and demand module, I finally had enough kind of mental headspace to then jump in and really define mechanical entry models as my starting point, as my sort of hypothesis of what I think could work, apply that to the market and then see if there's something to play out. So I started doing that, and then bit by bit I've started to tweak them and kind of get more answers, and I'm kind of now at the point where I think I've settled for the most part on a general framework that seems to be working far more often than not, and has been working really good as soon as I've started to forward test it, which we'll go through in a minute. I'm going to go through that kind of reasonably high level model of what I'm working with. Now, there are loads of little nuances to it and slight variations, and that's kind of what I'm working on in the background, and I don't really want to kind of publicly forward test that with the whole community, because understandably it can lead to confusion, and I don't want to add unnecessary bells and whistles whilst I'm trying to fine tune that. But I think it's worth going through the higher level sort of solid framework, and give that to you guys now, which I kind of have been. Hopefully you've kind of got that from the last few recaps and stuff, and you guys can do what you want with that. You can take that as your framework and begin to explore it. You can ignore it, you can do whatever you want, but today has been a really good example of kind of how it can help with the trading. So let's kind of just go through it. So essentially it's kind of two main things, right? Now I'm going to talk about in terms of entering on the M15 POI and then with M1 entries, but if you're an M15 trader, you can think about it as a 4-hour POI with M15 entries, right? It's all the same fractal. So essentially, if you're on your medium time frame, so for me that would be the M15, you have an M15 pullback, you have a break of structure to the upside, there's maybe a little pullback here, right? And then there's a movement up there like that. So you have a break of structure, oops, okay. Whether it's an IBOS, whether it's a swing break, whatever, there's your break of structure, okay? Now, you may have multiple POIs, you might have the extreme like this, and then let's say you have this one here, okay? Now, the basic premise we're going to work with is if there is no inducement, so an inducement is when you have a structural low like this, right? So this POI does not have inducement, right? Because there's no structural low in front of it. This POI does have inducement because there is a structural low in front of it, okay? So that's where we can draw our nice little liquidity thing, right? And we can draw on what I've been doing is just, if you do a box like that, right? So it just shows there's no structural liquidity there like that, okay? So out of those two POIs, this bottom one has inducement because it has a structural low, this one doesn't, okay? So what we are saying is when price returns to your POI, okay, if it doesn't have inducement, then you need to see a strong liquidation when price comes here, because basically when price returns, the question you're asking yourself is no liquidity has been taken, so liquidity must be built here, okay? Now, again, there's loads of variations and kind of what I'm exploring on what determines liquidity being built, but the two simple ones I'm going to give you are obvious equal lows here on the M1, or if you can see it on the M15 even better, but right, it needs to be in your entry time frame. Obvious moves away like that, right? And then you get that liquidated. Okay, now you've had the liquidation, so now you can enter from here because there's no inducement. You need to wait for this, or it's a sweep of a strong low. So it needs to be a low that breaks a high, right? So some people are calling this fake chalk. Okay, so this low actually achieved something. It broke structure. That is now your sweep. So now if we get the break, now you can enter, okay? So it needs to be obvious equals or a sweep of a strong low, a low that actually achieves something. If you just get price coming in like this and then it breaks, this is not your entry. Why? Because there's been no liquidation. This is not a sweep of a strong low because that low here did not break any high, okay? Whereas this low, it broke structure. So that's your strong sweep, okay? So what am I saying? I'm saying if there's no inducement, no liquidity has been taken when price returns to it. So you need to wait for liquidity to be built and taken here. So you want to see obvious equal lows, or you want to see like that on the lower time frame, or on the M15 as well, even better. Or you want to see, let's call it a fake chalk, right? You want to see a strong low, then get swept, right? Then you get the break, or at least, you know, some decent price action in here, and then we can go, okay? If there is inducement, okay, so there is structural liquidity here, and it needs to be near the POI, not like all the way up here, it needs to be near it like it is here. If price comes down to this POI, you do not need to wait for that strong liquidation, okay, because liquidity has been taken here. So as soon as you get, you know, your M1 shock and the rest of it, right, you can enter. You don't need to see liquidity be taken. You can enter on a flip without liquidity, okay? So some of you, you're probably thinking there's so many different variations in which this could happen. Like you could get down here, do you need a flip that sweeps, blah, 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 blah. And there's all these, you know, variables that I'm exploring and looking at. But the main hierarchical sort of, lack of words here, like high level, simple framework of what I want you to, or what you can follow if you want, which is the base framework of what I'm working with, is if there is no inducement here, right? So when price returns to the POI, if no structural liquidity in the leg has been taken, so there's nothing here, I need to see liquidity built and taken here. Otherwise, I'm not going to take the trade, okay? If we come down to this POI, right, it's taken the liquidity behind this low. So now I don't need to wait for that strong liquidation. A strong liquidation is obvious equals, right, that then get taken, or a sweep of a strong low. So that low achieves something, then the low gets swept, that's the sweep, right? And then we can look for the entry, okay? Cool. Now, we're going to just quickly look at this on the charts. I appreciate this is not in the course, and it will be coming as soon as I can, you know, when the time is right and get that out. It's what I'm working on. Liquidity is my main focus at the moment, right? But I just thought, maybe I don't want to regret putting this out here because I hope it's probably going to lead to more confusion and we get tons of questions, which hopefully not. So if this doesn't make any sense, then maybe just wait until I've done, you know, the actual course module comes out, and there'll be tons more examples, and I myself will have done more work on it, and I'll have a lot more nailed, and would have forward tested it more, and I'll be able to answer all the FAQs that are probably going to come up, okay? But hopefully just rewatch that little bit we've gone through, and it will make sense, and we'll just look at some price action now. Quick caveat, yes, on the 4-hour chart, okay, it's a bit of a mess, right? We know, I don't want to get too stuck up on this now, we're taking lows, we're sweeping highs, blah, 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 blah. We kind of had a chock here, so there is supply here. You know, we could be mitigating this, we could be going lower. This is a mess, right? But just ignore that for the minute and just imagine the 4-hour chart is super clear, it's super bullish. Just think of it super bullish, right? The M15 is bullish, right? Just imagine the high time frames are super clean. We've pulled back down into the extreme. This is the strong M15 low, and now we're just looking for longs, right? Imagine it's picture perfect bullish price action on the M15 and the 4-hour chart, okay? And just imagine that, and I want you to, let's just focus on the liquidity, okay? So when price is putting in, again, imagine this is the strong low, everything's super bullish, and we want to try and get that next swing leg, okay? So we have our M15 POI within the 4-hour demand, right? Now, as I've denoted by this box, there's no structural liquidity, right? There's no pullback there, right? So what does that mean? Like we've just gone through, we need to see there's no liquidity to be taken here. We need liquidity to be built here. Otherwise, we're not going to take an entry. So what happens? Nice, obvious. Now, I only needed to see it on the M1, right? Price could come down. If I look at the M1 and I get my obvious liquidation, I'm happy to get involved. But it's even better. Like this is nice, big M15 equals during Asia. Then the liquidity gets taken, right? Then we get the V-shaped reaction. It's now perfect. I'm all over this, right? This is high probability because we've had our M15 POI. There was no inducement, but now we've had the liquidity created and taken, so now we can get involved. What was even better about this is just before the entry, what happened? It's a bit hard to see, but there was a bullish chock from within here, right? So then that creates a low that actually achieves something. And now you have even more inducement for this POI, right? I didn't need the inducement here because we'd already had the liquidity taken there. But now that we have inducement, even better, right? So now, boom, off we go, okay? Cool, so we spoke about that during London. But here for New York, right? Again, just imagine, I know there's, you know, potential, this is for our supply and it could become lower and it's a bit messy in the middle of the range, but just imagine that, you know, our bias is super, super bullish. M15 swings bullish, the internal is now bullish, right? We've had another bullish IBOS. This is our strong internal low. So now we're looking to buy that internal low to go higher, right? Just imagine that, okay? So as price is coming into our M15 POI, what do we have? No inducement, okay? So we can put our hollow box here if it helps, okay? The reason why there's no inducement is because there's no fractal low, there's no structural low. That's what you'd want to see. If there was inducement, nice structural low right near it, but there isn't, okay? There's these lows up here, but they're too far away from me, okay? It needs to be near the POI. So when price is coming back down into here, okay? When this mitigation happens, what do I need to see? I need to see a buildup of liquidity. So either obvious equals or a low that actually achieved something that actually broke the high, then see that low get swept, and then we can look for the entry, right? Okay, so let's bring it back. Let's just take it slowly. I'll show you this one. And this will save so many losses I'm seeing people look into. Okay, so we get our M15 mitigation, because obviously that's the first thing you want to wait for. So if we look at the M1, all right, no liquidation, okay, no obvious equals. If this had done this, like that, and then had a movement away, and then came in, and then broke that high, okay, I would say liquidation, strong equal highs. But that isn't anything. That's just price coming in and coming down, okay? This low didn't achieve anything, right? Okay, you could argue it broke a chock there, but for me, it's just not that great, right? It's miles away. It's for me, that's not enough, okay? So here, that would be the chock. We don't even break that high. Okay, so nothing's going on. This is a weak low, hasn't achieved anything. So let's be patient. Let's not get involved, okay? So we're coming up. What happens? Nothing. So this does get a little bit messy. It's getting towards sort of the end of New York. And now we break the high, okay? So if we look at the M15, this is what actually gave you a lot more of a, it made it a lot clearer, okay? Because now what do we have? We have a bullish chock on the M15. Where are we? M15 chock, okay? So now this low here has done what? It's actually achieved something, right? It's broken that fractal high. You can see we came down, we came up, right? We came down, we came up, we came down, we came up, we came down. Now we've broken the high, okay? I think there was actually, yeah, there was a chock there, but it broke back down. But anyway, it's miles away, so nothing to do with the POI. We want to see something within the POI. So now that low's achieved something. This is the low now that I want to see get swept, because if that low gets swept, what have we had? We've had a strong liquidation into the POI. Okay, now what's even better here, and what when you get used to this, you'll notice, is when that happens here, right, before, it's quite easy to go, right, M15 mitigation into the strong low, bullish change of character. Okay, we've got this M15 demand level, but if you know that there was no inducement, here, nothing in the leg, and you know you want to wait for a strong liquidation, and you've seen an M15 chart, but then you also see price doesn't even close above the high. There's a lot of reason to now think that this low is weak, okay? And it's probably going to get taken because we know that it's likely there's price is going to want to make that strong liquidation. It's also failed to cause price to close above the high, so this can potentially be an unavoidable loss. Now, there's probably going to be times when this plays out, okay? But again, if you want to be a little bit more conservative and wait for the higher strike rate, I'm noticing this play out far more often than not. And this is previously where I would get caught up, probably buying this. And then as we see what happens, price comes to the downside. Now on this data feed, I think it sweeps it. What's this low here? You look up here, right? You can see the low. So the low for this candle is 95.6 and the low for this is 95.5. So technically on this time frame now, there has been a sweep of that low. So perhaps you could start looking for entries. But for me, I would not be convinced of that. 0.1 pips. Perfect equals to me, like, and also we never even end up breaking this. And maybe there was an entry on the M1 after sweeping that low, but I'd be pretty cautious with that one. Like, that's not a true, it's not a convincing liquidation. Whereas now look at it, we're coming into the extreme, so we know there's going to be like an M5 or an M1 down here. Okay, so now when that happens, now you've got everything. If you like this overall trade idea, right, imagine higher time frames, you like everything. You don't necessarily have to in this specific scenario, but I'm just saying, the liquidity model, no inducement, wait for a strong liquidation. We've now had a low that caused a high, right? So achieve something. So now we want to see those lows go. It pretty much forms equal low. Yes, I know it's swept it by 0.1 pips. That's literally nothing. That could be just, spread with a broker. It's nothing. Then those get taken. Okay, now I'm super interested. Again, if you liked this M15 POI. So what do we get on the M1? Now you can be aggressive with your M1 entry model, right? So that low just gets taken. What's the low there? 84.0, 83. So again, this is a bit of a tight one, right? On another broker's data feed, that's probably equal lows and didn't get done, but on this one, that did take the low, so technically that is your M1 chock, okay? So we're super mechanical with this time frame. You have had a bullish chock there. Even if you didn't, there's the chock there anyway, okay? So there is a chock. Wrong one. That extreme inside bar technically has had a mitigation. You see how price tapped into it. So you could still set your order here. That's one of those tricky ones where you probably want to try and include those sell to buy wicks. I think that does play out, yeah. So that starts holding. So it depends on how you enter, right? I know some people like to take these whole ranges now and try not to be too over refined. So essentially getting the M5 pivot candle. But maybe you want to, maybe not even sure, right? Maybe you want to see like this hold, right? And look for the DCE. So you could look for this high to go. Let's see if you didn't take an entry there. So you've got like another break, right? So now you can look for the DCE. So basically assuming that this is being mitigated, right, this range. So where you're going to enter, again, a little bit corrective, not the best, but it is a kind of that towards the end of the session. Now you do have a sort of flip within here, right? Because you have, just move this out of the way a little bit. You have this supply, right? Price comes into supply, reacts, pushes to the upside. Does actually also sweep liquidity. Okay, which is nice. You get a sweep of that low there. But yeah, a bit of a messy one, right? You'd probably, it's kind of like, kind of want to take the whole range just in case it does push a little bit deeper, but if not, you could be a bit more refined and take there. I mean, let's see how many pips it is, right? This is where like I've been way too over refined in the past, and I'm always trying to get like, but you know, just for the sake of 6 pips, okay, not the most amazing in the world, but if you're trying to target, you know, all the way up to the swing high, right? There's plenty of risk to reward there. You don't need to be a dick for a tick, but let's just say you do want to be a bit more refined. Pretty much all of that is mitigated anyway, and we've had the sweep of liquidity, so we don't need this bit here to sweep. There's your 4 pips. And there we go. Anyway, I don't want to get too caught up in M1 entry models. The whole point really I wanted to get here was not getting involved in all of this mess. You know, if you wanted to get long, right, and potentially taking early losses, like looking M15 chock and then trying to get long in here and then wondering why I get stopped out. It's just like waiting for that strong liquidation to happen and then getting involved, okay? I don't know if this is going to play out or not, where we are. You know, we could mitigate here and dump, but that's the general idea, right? It's basically, if I can end it with this, here's how you want to think about it so you don't overwhelm yourself. Whoops. If you're looking at your POI, so whether whatever time frame is your medium time frame, for me it's the M15. If you're an M15 trader, it may be the 4 hour for you, right? But wait for it to be mitigated. No inducement, okay, so I know I need liquidity to be built. Built, broken, okay, now I can enter. All right, I don't need any inducement here. I don't need, you know, there to be something. If there was a flip, okay, I don't want to lose you with all the variations here. I was going to say that, okay, I'll leave it for now because I have a few things I'm working on. We'll think out. Keep it simple. If there's no inducement, but there is liquidity, and then it gets taken, you can take basically the entry there, whether it's the flip or the extreme. This one is simple because it's super clean extreme, and even inducement even built here, which was even better, okay? Because there was a fake shock there. This one, same again, price comes up, no inducement in the leg, so what do we wait for? This low finally breaks some structure, so now we have a strong low, so we can wait for that to get swept. We don't want to get sucked in on buying with just that chock. Even more of a sign that this low was going to be weak was price failed to close above it. Price then comes down, builds some nice, pretty much equals, then we get that taken. Okay, now we can look to get involved, or if you want to be a bit more safe, you could then actually wait for that to break and then get involved. Obviously, we're getting towards the end of the day now, okay? So that's kind of the general higher level base case liquidity framework I'm working with, okay? If there's no inducement, wait for liquidity to be built on the return. Otherwise, you can just get involved straight away, right, with the standard M1 entry model. Now, there are, like I said, a lot of little variations within that, but I don't know, I'm kind of like, hopefully some of you who are at that stage now where you can take what I've said, take this initial case and do what you want with it, right? Use that to go and explore, use it to test your own hypothesis, use it to just keep an eye on things going forward, use it to forward test. For some of you, if you're not quite at the stage just yet and it's a little bit confusing, just leave it and concentrate on the core concepts, okay? So yeah, hopefully I'm not going to regret kind of putting this out a little bit too early and get flooded with a ton of questions. If you are confused, just wait and we'll do a lot more work and a lot more content on this when I have this a lot more fleshed out myself, because there's a lot of ideas that I have with slight variations that I want to get more data on and before I kind of start adding unnecessary bells and whistles to your guys' trading. But very simply, if there's no inducement, wait for a clear liquidation, and I think that will really help to boost your strike rate, hopefully. So yeah, hope you took some value from that.